Welcome to the broadcast and welcome to what I might call the bear market blues. And that's exactly what I want to talk about today. Are we in a bear market? What does it look like? How long does it last? And kind of all of the ideas that I've been bringing about the last couple of months or so. Uh-oh, hold on. And bring it all together to say, okay, this is where we're at. This is where I think it's headed. And if you watch my previous broadcasts, I've been talking about this for a long time and talking about the trajectory and pathway that we're on and the reasons we're in the position that we are today. And so that's what we're going to go over in this broadcast. If you really like what I'm talking about and you like what I'm putting out, make sure that you subscribe to this channel and that you like this video. The more that you like it, the more it tells YouTube that people like what I'm putting out and that they should put it out in front of more people. Also, if you're interested in getting inside of my private free messenger chat, just comment chat down below and I'm going to link the actual link to the chat in there as well, because everybody in there gets to know what I'm doing, why I'm doing it, and everything in the before anyone else does. And it's like I said, it's a free chat. So it's not like you can actually lose or anything. And I keep scammers and shillers out of there. So that way it maintains and stays as a safe place. But without further ado, let's take a look at CoinMarketCap and see what is going on in the market. First, what I'm going to do is I'm going to share this broadcast link out to my community, and then we're going to open up CoinMarketCap and get an idea of sort of where the market's at. We're going to take a look at DeFi. We're going to see where the DeFi market's at and ultimately where we're headed and where I think we're going. I've told you guys like 847,000 different times where I think the market's headed. So if you've been watching my streams quite a bit, it's not going to be much of a surprise to you as to where I think we are and where we're going. But if you haven't, today is going to rock your socks. And it's going to tell you where we're headed and what we're doing. And ultimately my reasonings behind how I've got to the assumptions that we're at today. Every time I type live, it changes it to love. Cool. So let's open up CoinMarketCap and take a look at the overall market itself right now. So when we look at the market here, basically what I'm looking at is just not really much happening. Bitcoin had a little bit of a pump, but if you watch my broadcast last week, it's almost always a weekend pump to a Monday dump. It's like retail investors get in and start buying, and then institutions come in and dump on the retail. It's like clockwork. Literally every weekend, you could actually put in a long on Friday and then put in a short on Monday and probably win every time. Now, don't quote me on that. It's not financial advice, but I'm pretty sure it would work out because it's been like that for a while. Anyway, we've got Tether staying close to peg. It's came down quite a bit since 9989. That's pretty good, but it's come down quite a bit ever since the UST problem came about. It looks like US dollar coin is actually catching up. It's becoming sort of the gold standard. Also, Binance US dollar seems to be coming up quite fast as well. It's been able to hold its peg just like US dollar coin fairly well. Tether's come off a little bit. It's taken quite a bit of heat in terms of its curve pool getting moved around, but nothing crazy. Overall, I just think the market is the market. We're sort of in like a bear scenario. Tron, in my opinion, actually will probably take the place of Luna. So I think Tron's going to be what Luna was before Luna colossally collapsed. So you're probably going to see at the first available opportunity where Bitcoin doesn't just colossally dump on us, you're going to see Tron probably take off like a rocket like Luna did. So something to look out for. We've got DAI that's holding well. A lot of stable coins are doing fine, other than obviously UST and Luna. They're saying that they're making a new blockchain. So Luna 2.0, the old one's going to be called Terra Classic. You're going to be able to get an airdrop that gives you sort of a compensation for however much UST or Luna you held. And so that's going to be really neat because it's going to allow people to essentially get compensated at least a little bit for the money they lost in the UST Luna debacle. Anyway, outside of that, not too much to look at, not really a lot going on. We can see a few things. Aave, I can't believe it's $98. I remember when it was like $600 or $700. Axie Infinity, nothing's really doing well. Phantom had some good news finally after Phantom just getting crushed for a while. Someone saw Phantom's had an upgrade, SnapSync. It had that Andre Crone guy come back, who's like one of the top developers in Phantom, which is sort of a love-hate thing. He tends to abandon projects and disappear and then come back not too long later. It's kind of like a gaslighting relationship. The person leaves and then comes back, leaves and then comes back, leaves and then comes back. So anyway, that's been bullish news for Phantom. So it's brought it up quite a bit. Outside of that, there's not a ton going on. It's just kind of the sort of bear market blues. When we look at DeFi, we have we're not doing great. I mean, it's still in the same scenario. I think it was literally right here last time. It was negative. At least we're at the 2%. Interesting thing here, though, MakerDAO has surpassed Curve. So the Curve wars, and Curve has been a dominant platform for a long time. And so seeing Maker come back and surpass it is kind of interesting, because it tells you that Curve is losing a lot of its total locked value, which tells us that we're moving into sort of a more of a bear scenario, because people are pulling out. They're getting afraid because Curve is like the dominant like stablecoin swapping platform. So stablecoins are in there. And what this is telling me is people don't trust stablecoins right now. So they're pulling out of that, which is affecting and impacting the Curve dominance. So it is no longer the dominant platform. It's lost 50% of its value. And I think we can probably attribute that to the fact, to the UST sort of collapse and debacle. Everything else is kind of getting hit pretty hard. Just Lend is up 44% because it's supporting the new Tron USDD stablecoin. My thoughts on that: it's essentially similar to the concept of UST, but they have a lot more reserves and backing. So take with that what you will. Be careful with a lot of these algo stables. And we just kind of have to watch and see if it survives and how it looks and sort of how everything goes. I did see Tron DAO allocated like 10 million to help the people from the UST issue. So I thought that was cool, but that's why Just Lend is up quite a bit. Outside of that, Frax down 46%. People are afraid of stable coins right now. Nothing else looking super great. SunSwap, another Tron-based platform, that's why it's up so much. Basically, anything associated with Tron right now is going to be pumping, is what it appears. And every time Bitcoin pumps a little bit, Tron goes crazy. So it's kind of how DeFi looks. When we look at the chains, I don't think it looks much better. So Tron, obviously number 3 now. That's actually crazy. It's surpassed AVAX and 5 billion. So Tron passed up AVAX, Solana, Polygon, all of these things. Phantom down like 67%. Chronos, all of these are Avalanche 57%. AVAX got hit pretty hard with the UST issue as well. So a lot of things getting hit. It hasn't been the best realm for DeFi. So outside of that, though, because the show is supposed to be more about Bitcoin and sort of where the overall market is, let's move into how it looks. So recently, let's move up to this chart. We had Bitcoin move. I made a little channel that it was sort of trading in, and I knew it was going to die and fall out. But when on May 20th, we kind of rode sideways, then we pumped up over the weekend through and moved out of the channel, stayed above it. And then Monday afternoon, like clockwork, we dumped right back through, literally almost to the bottom of the channel. This is what happens every single week. We pump through the weekend, and then we get dumped on by probably professional traders and institutions coming in who want to put in good shorts and crush retail. And so that's what's happening now. And as you can see, it usually comes up, short, come up, dump, touch, come up, dump, touch, come up, dump. We're probably going to touch again down here. My philosophy right now is it's not a terrible thing. I don't think we're going to hold this support line for forever. I don't think this is going to be the bottom. And I don't necessarily think this is going to be the bottom. So for me, though, right now, and this isn't financial advice, but what I'm doing at the moment is not putting anything into alts, because what's going to happen is as we keep dumping and as we keep getting hit, alts are going to get crushed and dumped on a lot worse than Bitcoin will. And so for me, the philosophy right now is collect Bitcoin and ETH. That's pretty much all I'm doing at the moment. And I'm doing it on trend lines and channel. And so what I look at is how many times have we touched this line? Let's go to the weekly. Oh, that's not a good one. Let's go to the daily. So on the daily, we've touched this line 1, 2, 3, 4, 5, 6, 7, and maybe possibly 8. We only have about a half hour left on the daily candle here, but that could be the 8th time, which then we will just move up a little bit, and then through the weekend, we'll pump probably through it, and then we'll dump to the bottom of it. And then eventually we're going to have to make a decision by like the end of the month, May 30th, of whether we're going to go up or straight down. In my opinion, with how strong these red candles have been, we're probably going to break to the downside. And when we do break to the downside, we're essentially sitting right on the lower end of this channel. So the higher end of this channel is in like the 38,000 area. The lower end of this channel is 29,019. So what happens when we break through, because notice how we've wicked off this channel essentially every time. When we break through that, we go back down, we start trading in as long as we stay below it. So last time we broke through the channel, it wicked up. The other time it came down, wicked all the way through and stayed above the channel. But if we do break through this and we come down a wick and we get rejected off of coming back up, it puts us down here to retest this 200-week support band, or you can see this little gray line, or maybe you can, I don't know. But this gray line here is around 21.4. So I would see us wicking somewhere between this 21.9 and like this, not wicking, but so holding support above this 200-week moving average. I mean, we could wick as low as, who knows where we wick. Maybe we wick somewhere around 14,000. We have a huge wick that drives us back up. And then once we hit that, we probably sit here until like, probably all through summer, we sit here and we go down and then we come back up. We finally get support on it. And then we move back up until like later this year. And then maybe once we hit here, we can call that like the official bottom, wherever we wick off. And whenever we find support and hold above here, that's probably the official bottom where we'll find the wick, and it'll be here. And then it'll probably just slowly move up. And it could be the end of the year we move up. It could be till the next halving, which is 2024. So it's kind of hard to tell right now with how it's moving, but we are in a position to be in a pretty solid, for lack of a better term, bear market to, for me right now, it's a position and an opportunity to collect on Bitcoin and ETH, because I know right now I can use this opportunity where we're riding literally the bottom of this support. It's not going to hold forever. And then we break through and we touch down here in the 21.9 range, or we even touch down here. Like for me, I'm going to put orders in this 21. I'll probably have orders like around 25, 22.2, 18.7, 16.2, just littered with orders in this area, because it's like, this is like life-changing revenue opportunity, life-changing opportunities to create wealth. And when we look in the past, when we've touched this 200-week support band, like the COVID crash, we're in a similar scenario. We have inflation going crazy, the Fed raising rates. We have the Ukraine crisis. We have the COVID thing that's still going on. I'm not sure if I'm allowed to say that on here. Probably going to get shut down now. And then now we have the new monkeypox thing. So it's like everything on top of everything. I don't even have enough hands to count how many problems we have in the world right now, which is like when the COVID crash hit. Oh, shoot, I used that again. But what happened is we bumped all the way through. We wicked. Notice how we touched below this 200-week moving average. So we wicked down here and then we came up. It took several days to gain support on it again. And then we just moved sideways from basically March 19th all until like April 29th, until we were able to come back to this bottom channel line here on this logarithmic regression band. Then we rode sideways in this channel again. We came up, hit the top, and then from April 29, 2022, we basically moved sideways through this channel until we came down, established sort of a bottom again in July 22nd, 2022. Then we came up, challenged this top again till August. We got rejected, wicked off it again in September. And then we finally broke out in November 5th, 2020. So from essentially when we got back, from when we actually found the bottom, technically right here, March 13th, 2020 until November 5th, 2020. So several months later, which could be a scenario that we're playing out right now. If the economy tapers out, inflation goes down, the Fed gets a little less hawkish, we could see that happening. We could also see it taking a little bit longer to play out, but we could be here for several months. It could be the whole summer that we sit in this position and kind of wait. The typical thing that we do find in these bear markets, when we look at the charts long term, are this bottom typically coincides with wherever the previous bottom top was. So like right there on that 200-week moving average is literally where it's at. So we're sitting here, this 19.5 or this 21 area, but it's kind of where this final blow off top was for this cycle. You could even argue 14,000, maybe 14,000 ends up being where that wick hits. Maybe we wick down and then we come back up and collect ourselves right there. So maybe the big wick is down to the 14K zone when everybody's panicking and running in circles. And I'm in here like scooping it up because it's awesome. But that's the position to maybe we wick off of. Maybe the ultimate bottom, let's make a little line here to see if we were correct down the road. But maybe the ultimate bottom coincides with where that is. Typically, we find the bottom is here near the 200 week. That doesn't mean we're going to go here and just magically come up. It means we might come below, and then we'll come back up and establish support. And once we get support on this logarithmic band, we'll stay sideways on that for several months, and then we'll eventually challenge it and break out and restart the bull run. But that's kind of where I'm at with Bitcoin and what it looks like. Another interesting thing I wanted to share, but before I get there, let me check the chats. If there's any questions in the comments, please post those down below if you're watching, so that way I can actually answer your questions when I check. But the other thing I wanted to look at was the Bitcoin dominance chart. So as we can see, and what's typical in a good bear market is Bitcoin dominance will skyrocket. So like from here, May 11th, 2022, Bitcoin dominance has just gone parabolic. It's fairly high. We're at 44.82%. When we look in the past, when Bitcoin dominance has gone up, that's indicative of when we're in this bear and when Bitcoin finally eventually makes its final move. But for now, we had our last December 1st, we had the dominance go up to 70% of 2021. We had the dominance back here, 72% in August. Bitcoin dominance kind of faltered after obviously 2018. So right now what we're seeing is dominance coming back up, and because alts are bleeding and dying, and they bleed harder than Bitcoin. So I think what we'll see probably is Bitcoin dominance come back up here to challenge this 200-day moving average. And we could see it in the 50 to 70% range before this sort of bear market ends, which will be interesting. And that's why I say it's a great opportunity for me to collect on Bitcoin. And I know you could argue probably not ETH as much because it will bleed probably worse. But for me, those are the two ones that I know are going to stick around. And so what I like to think about is what's going to be here long term, because a lot of these projects won't survive a bear market. So when I go over here, a lot of these things are going to be dead. If a bear market happens, they're going to run out of money. If they don't have working products, they're going to die. It's going to fall apart. So for me, what's going to still be here? Bitcoin, ETH, probably BNB, a couple of real businesses that have their systems and their markets already set up. But for me, the one that's going to bleed the last is going to be Bitcoin. And so for me, the opportunity to go like 50% Bitcoin and like 40% ETH and then keep 20% in stables is perfect for me. And then when we get down to the road and I want to accumulate, when we do hit this bottom in this range, what I will do is wait for us to, maybe this is the bottom. Maybe the 14 will be our wick. Maybe we wick there. And then once we wick there, and your favorite alts are like 75% down, 90%, 100% down or whatever, and they survive and they actually start climbing up, that's when I look to accumulate. So when we come down, say it's like we hit that bottom, I doubt it's December, maybe it's like probably June, July-ish at the latest. Say June, July-ish, we hit that bottom, and then we drive back up until December or whatever. Maybe it's before that, but whatever. Whenever we hit that and I start to see that drive and we start to connect and catch on this channel, then I know we'll finally be in a good place because boom, alt's dying, alt's dead, alts continue to die. And then we start driving back up, alt's getting some strength, alt's getting some life, Bitcoin hits this channel, alts die again, alts fall apart, Bitcoin comes back up, alts win. So that's going to be the good opportunity for me to start accumulating once we're back in this little channel. That's like accumulation phase for me. So, and I know we're in there right now, but I just don't think we're in a position to jump into alts because I think that they're going to bleed a lot more. So for me, it's like when we hit and we come back up, challenge, and we actually get back in this thing and start going sideways for like a few months, that's when I want to start jumping back into alts and really dive into them. One could argue that maybe when we hit this bottom and we start driving out, things like BNB could be a good opportunity because it's a functioning business. Binance isn't going anywhere. Even Litecoin, people like to make fun of Litecoin, but the thing's still here. It survived more than a lot of these other projects. So then, and then I'd probably look at, okay, Litecoin's still going to be here. Matic has a pretty heavy presence. DOT, some of these might be okay. Mana actually has a functioning product, so maybe, but I'm going to get into more of the big caps. And then once we come in here, I might start looking at small caps because small caps are going to bleed a lot harder. And anyway, most of my portfolio are all small caps anyway, so I'm not super worried about those, but I'm going to sort of look in that range. Hopefully that makes sense. And then, like I said, Bitcoin dominance. So we've gone over that. Looking at the ETH chart, ETH is just trading in the same sort of channel. ETH has basically been right here for a while, same as Bitcoin basically, and trading in the channel. Top of the channel for me is 21 51, bottom of the channel somewhere around 1905, 1849. So I'm doing the same thing with ETH. We've got put some orders in, figure out where ETH is in the long term, looking at the monthly. This is the Coinbase chart. So we'll see if we have, oh yeah, so last time, even looking at this, ETH bottom was there. So maybe 1104 is, oh, that does coincide with the 200-week moving average. So that would be like perfect. Like that's probably where ETH ends up. So for me, buy order somewhere in this area, in this little area, freaking amazing. It's an incredible opportunity to jump into this thing and see a huge wave on the next bull run. So for me, it's like orders when whatever channels we create, probably 1402, and then somewhere around 1100, because we'll get stuck on this for a while. If we go below it and come through, we'll get stuck fighting through it. Prime opportunity to jump into that. Not financial advice, but I think there's a lot of opportunity presenting itself there as well, especially with ETH2 coming out in August. Who knows if that'll pump it? If Bitcoin wants to still die and fall apart, then it's not going to do anything for it. But if it does, and we've had the opportunity to collect all summer in this zone, that's like, say ETH goes from like 1,000 to 10K. That's a 10-time return on ETH alone, which would be incredible. I mean, look at last time when we found the ultimate bottom or whatever. If someone was able to get in here when we were wicked around that, let me find it. So let's say the bottom was like, let's say someone got in around $133 per ETH last time around. And then let's say they magically somehow managed to get out the top, which is probably nearly impossible, 4,800. So, I mean, that's a serious return from there all the way to the top. And my opinion on this is I watch these channels. When we get into a new channel, I sell 10% out, 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 and then kind of get rid of the rest once we hit certain zones. But it's another big opportunity. So I think these are the ideas where people run away scared, but they're the opportunities that present itself to create life-changing wealth, for lack of a better term. And same thing here with ETH Bitcoin to chart. I remember talking about this last time, that we were sitting here just sort of struggling. We were above, we held for a while, then we just legitimately dumped straight through right when Bitcoin Dominance started pumping. And now we went through the breakout all the way to the bottom to the channel, came up a little bit, but we're sitting here. So this is likely to break out to the downside in this position where we're at, with Bitcoin Dominance coming up so fast and so hard. So I would imagine that this probably doesn't have a ton of strength. Maybe we come back and challenge again, but I think it breaks to the downside in terms of where we're at. And eventually we'll break to the upside and we'll have an alt season, but it'll happen after Bitcoin has a breakout. Then when we look at the overall market, we're in the same position like I talked about last time. Nothing new or crazy. We had a good day today. So market opened up and had a little bit of a rally, not too bad. I mean, we had a good wick off this last time and we rallied all the way back up. So legitimately erased that entire candle, which has been ridiculous. But last time that happened as well, we dumped straight back through. So what I think we're heading for, and this one probably is to visit this 200-week moving average as well. So NASDAQ around 10,759. I think the same position for that's the Dow Jones. So I think the Dow Jones, which had a great day today as well, it erased all the previous gains and then some. But I would anticipate probably maybe challenging this little resistance line now and getting rejected and probably moving to this area as well. You can't tell. Maybe the Fed gets less hawkish and some good things come about the market, but it just doesn't appear to be in a place to where it's going to do that. We'll see how it opens up tomorrow, but I would anticipate resistance and then push back down. The good news is once we hit these zones, I mean, we might go below it, but we'll be in a position to essentially move back up. When we look at same thing previous peaks, like right here, before we had that COVID crash, probably a good zone is in that same zone, legitimately that exact same zone. When we look at this, it puts us right on track to hit that 200-week moving average. So this is essentially the channel I think we're going to play in for a little bit. That's pretty much it. That's all I have to say for today. If you have any questions, drop those down in the chat below and let me know, and I will answer them. If not, drop them in the Signals chat if you're in there. If you're not in there, just drop your questions when I get off and I'll answer them, and be sure to get through them all. If you like this broadcast, make sure you like and subscribe to the channel, so that way I know you like what I'm putting out, and share it with some friends. Share it with people who might be able to benefit from an unbiased and objective opinion on where the markets are headed. And if you watch my previous videos, more often than not, I'm right. And I tell everybody, I want to be wrong about the bear market. Let's make that clear. I want to be wrong. I want this thing not to hit and just go up and never stop coming down. But that's not the case. So hope you all have a great day, and I'll talk